Welcome back friends, for one more update from the world of high-growth EV stocks. In case you are new to this channel, please do consider subscribing. And in case you live in the United States, we would like to take this opportunity to mention that we have now partnered with Webull, and they are giving away 2 free stocks worth up to $1,850 in total when you make an initial deposit over $100. That's just a lot of free money, and we think you should definitely consider signing up for them. All you have to do to claim this free money is use the sign up link from the description of this video. Now let us get right into it. The markets are off to a great bounce back, and the last time we checked, NIO was up nearly 15%, back trading above the crucial $40 levels again. This has so far all been a great sign this week, and we believe increasingly that the low of $31.91 last week was indeed at the market bottom. We should hopefully now see a gradual uptick ahead for most of the growth stocks, including NIO. Recently there have also been a bunch of positive news from China for the Chinese electric vehicle stocks, which we didn't see play out thanks to the bond market madness. But now once the dust settles, we believe all the pent-up positive news in NIO and other Chinese EV stocks may finally play out, and we could actually see a very sharp rebound. In more recent positive news, the other Chinese electric vehicle manufacturer XPeng reported highly impressive Q4 numbers on Monday, where they surprised both on top line and bottom line, and on top of that, the management of XPeng gave a very positive outlook for the rest of 2021. These have been truly significant developments from the Chinese EV space in the recent days, and given how much these stocks have corrected recently, a sharp V-shaped rebound could really take everyone by surprise. Back in 2020 March, we saw some of the sharpest declines in the Nasdaq ever, but what followed that for the rest of 2020 has been a historic bull run. Now, one factor to remember is that the actual bull run of 2020 started only after the stimulus checks reached the hands of retail investors. Guess what is happening all over again in 2021? The US government has just passed a massive $1.9 trillion stimulus package, and that money is expected to reach the hands of average retail investors very soon. Most of the younger recipients of the stimulus are being expected to put a substantial amount of their free cash into the stock markets again in 2021. And this makes us extremely hopeful that after all the deep correction we have seen in the growth stocks this year, this stimulus money can easily make a complete repeat of 2020 bull run. Cathie Wood was on Bloomberg yesterday evening, and again she said, with the switch to cyclical stocks in the last few weeks, the overall bull market was only broadening. That should only be a good news for all investors in the medium to long term.
Clearly you are feeling a fresh round of pain right now. What is your strategy? What are you buying? What are you selling?
Well, we keep our eye on the prize. We have a 5-year time horizon, and actually when we go through a route like this, first of all, the rotation now is happening very quickly. It started off slowly and is happening quickly. So I'm happy that the market is broadening out. This was the case in late 16 as well. Value took off and left growth behind. And whenever I see that happen, I say, okay, this bull market has broadened out. This is good news. What we do during these periods is concentrate our portfolios towards our highest conviction names. And so that's what we're doing. We had extended the number of names in the portfolio from the low to mid 30s at the bottom of the coronavirus. And now we're at roughly 55 for our flagship fund. And we are starting to sell the more liquid names and buy some of the more pure play names. So the more liquid names are either more mature, the Facebooks, the Apples, and so forth, or they are participating in innovation, but they're not pure plays. So Regeneron, Novartis, and so forth. So more liquid in order to have cash-like instruments to use at a time like now and move, again, concentrate towards our highest conviction names.
One key indicator of the overall sentiment of the EV stocks is simply how the Tesla stock is doing. Needless to say, if the Tesla stock sees a sharp recovery in price in the next days, that will play out positively on NIO and others as well.
So let's talk about Tesla then. You said that you were only going to buy the dip. Are you going to continue to buy the Tesla dip now that it's dipping even lower?
Yes, we can buy a stock up to 10% of our portfolios. And that's certainly in the ETFs. We report our holdings at the end of every day, so anyone can see that. And yes, we have been building whenever we can. Now, we built up to 10% last week, so the stock behaved in line with our portfolio. So again, we can't buy anymore here. If it were to deteriorate at a rate beyond that of our other portfolios, so drop below that 10%, we would then have the latitude to buy more, of course.
And in case you missed it, Kathy gave out an update to the investors at the end of last week, where she talked about what she expects from the electric vehicle sector over the next 5 years. It's a very exciting analysis.
I know there's a lot of fear, uncertainty, and doubt evolving in the world out there, but we're doing a lot of original research. We have a 5-year investment time horizon, and we are truly excited about the opportunities that the last few weeks have presented us. As you know, our minimum hurdle rate of return for any stock to enter our strategies is 15% at a compound annual rate over 5 years. That's a doubling over 5 years. Well, you can imagine what has happened over the last few weeks. Market activity alone has taken that projected rate, and again, it's just a projection. We could be wrong. The world could end. I'm sure I have compliance monitoring me very carefully when I say this, so I want to say it correctly. But according to our projections, what these last 2 weeks have done is handed those who are averaging in to these sorts of strategies, any innovation strategies, a gift, because we do believe we're on the right side of change. And disruptive innovation, transformative innovation is going to deliver exponential growth trajectories for many of our companies. In fact, most of them. The growth rates are enormous, and I think some people find them unbelievable. To give you an example, electric vehicles. We expect unit sales of electric vehicles globally, including China, to compound at an 82% annualized rate during the next 5 years. Most people, when they see a number like that, they'll just say, I don't believe it. It's not possible. And the reason for that, the reason we face that skepticism often, is because of where the automobile industry is right now. It's very mature. It's not growing. In fact, we believe it has peaked. And that means all cars are in secular decline if we are right that we are moving into more of a ride sharing, both human driven and autonomous during the years ahead. So this idea that electric vehicle sales could grow at an 82% annual rate, just not going to believe it. And so that skepticism festers, especially, I would say, among institutional investors whose analysts on the auto sector, for example, are mostly value analysts. So there are a lot of those disconnects in the world that are creating great opportunities for us.
As always, thank you for tuning into this update. And if you want to have a broader understanding of why the stock markets are falling these days, please check out the video you now see on your screen.